Welcome to another video. If you're new to the channel, I'm a top author on the TRADINGVIEW platform as well as running an educational company and swing trading full-time. What we speak about in this channel is multi-time frame analysis, order flow, and how you're supposed to be approaching your trading from a reactive perspective and not predictive, and how to use technical analysis and order flow to actually develop profitable trading strategies. So without further ado, let's get straight to the video and see what you're supposed to be doing when you're analyzing the market. And basically we will be taking some live market situations, analyzing them, and I will be showing you what you're supposed to be doing and what you're supposed to expect, and more specifically what we basically will be doing with students in this live market situation. So without further ado, let's get straight in the video. Okay, so as usual, let's take some situations in the market and let's analyze them. Let's learn from them and see how you're supposed to actually structure your trading. So let's start from GBPCHF. Now, if you remember, on GBPCHF, what we were speaking about was the fact that the market had created this very nice overextended W formation to the upside. And after an overextended W formation to the upside, what you want to see is a retracement. And what you can see is this retracement has already started today with this green candle. Now, if we take our Fibonacci from the low to the high, what we can see is that overall we have our structure area, because remember guys, this is structure, right? Previous resistance, which is now turned support at this level. Now, when you see situations like this in the market, okay, you have a market that bounces multiple times away from an area, breaks above, the market 90% of the times will go for the retest of that level before continuing with the overall upside trend, because you will have a confluence here. You will have a confluence of the structure plus the Fibonacci taken from the low to the high will give you a nice confluence, in this case, in between the 32 and 50%. And in this case, basically in this situation, that is exactly the case. We have a 382 and 50% retracement that is lining up with the structure. The structure is exactly in the middle of this level. So overall, what we can do is adjust our structure, okay? We can adjust it by putting it in between the 32 and 50%. So in this way, we are much more accurate. Now, if you're asking yourself, why do I have this horizontal ray exactly there? And the reason for that is that if we go down on a line chart, what you will see on a line chart. Now, on a line chart, you will have basically all the closes in the market. And closes, specifically if you have multiple closes at the exact same level on the weekly or daily and monthly time frames, so basically the directional time frames, what will happen is that you will have the market to go and stop usually exactly at those levels. That is something that happens. It is not like something that you can just trade blindly. Nothing you can trade blindly. You always have to follow your strategies, but you want to have that zone lined up in your mind, because the market will find some support exactly at this level. So this is what we have. We have a clear target and we have our support zone where we can have our fake breakouts. So now we have exactly an area, right, in which we want to monitor the price action on GBPCHF for a long. If the market will break this area to the downside and close below it from a daily closing perspective, we will not be interested in the long until the market will close back above that area. Then we can again be looking for the long. So it's very important to have these zones clear in mind and always approach your charts in the exact same way. So if we go and see what we have from a COT perspective, so basically what hedge funds are doing on the pound, what we can see here is that clearly with the last report, they have added 5.3k longs, okay? So we have a lot of longs adding here, okay? With the last report, 5.3k longs and close 2.7k shorts. So net positions went from minus 52k all the way up to plus 21k. Very, very strong shift. So in the long term, we definitely want to see a strong pound. And if we go and see basically what is going on CHF, what we can see here is that overall we went from minus 11k, we are now at plus 3k, but there's a very important thing to say. All the strength in the CHF is given by the shorts closing, okay? We have minus 6k, minus 6, minus 3, minus 4, minus 3, a lot, thousands of positions closed on the CHF. But if you look at the longs, we were at 14k here they didn't really shift that much. Okay, we were at 14K, again at 14K here. We don't really see proper longing on the CHF while the shorts are closing, meaning that we actually can expect some weakness on the CHF. Because what does it mean? If they're not adding longs when they're closing shorts, it means that they just want to short from better prices. It's just a pullback. So we can expect some short-term, actually long-term weakness in the CHF, meaning that GBPCHF can make a push to the upside. So from a COT perspective, from the positioning of hedge funds, we actually have a good confirmation for our overall view on GBPCHF. So how we will be approaching this trade, guys, as usual, just because you want to see the market from here make a push to the upside doesn't mean that the market will make from here a push to the upside. That is why you need a clear rule-based strategy. That is why you need rules, because what you're supposed to be doing and what we will be doing with students, we will be waiting for this retracement, and then what we will be doing, we will be going down on the 4-hour time frame, and we will be analyzing the price action on the 4 hours inside of this region. If the market will show some clear, obviously I can't tell you the rules of my strategy, but if the market will show all the rules of our strategy satisfied for a long position, then we will already know where will be our entry, where will be our stop, where will be our take profit, because we are following rules. Just a quick reminder, make sure you comment below the pairs that you would like me to analyze in the next video. But if the market will not show bullish price action around this area, we can't take the trade, because there is more probabilities that the market will just keep pushing to the downside and break below the area. So as usual, you have to be reactive and not predictive. Wait, have a clear view, follow the rules of your strategy, then know what are your rules of engagement. And if the market is not satisfying them, do not take the trades. So, and keep in mind that all those rules must be tested. It's extremely important that they are actually tested. So this is what we have for GBPCHF. We will be waiting for this pullback, and then we will be monitoring price action inside of this area. If the market will provide one of our valid entries, then we will definitely be interested in this long. If not, we will not be interested in the long. Keep in mind that there is the possibility to go even lower, to test its zone, create a fake breakout of this level, then close back above, and then the market can make the push to the upside. It's definitely a possibility, and we will be prepared to this possibility. Now, why there is a high probability for this fake breakout? Because the market has created this overextended W formation, and after an overextended W formation, usually the market is supposed to go for the retest of the neckline. Now, in this particular case, since we have this strong confluence zone of support here, we can expect the market to stop here, but nothing will stop the market makers to actually make a fake breakout, break back above the area, then retest it, and then make the push to the upside. And if you haven't seen the video about fake breakouts, I will make a more in-depth one very soon in the future. So this is what we have on GBPCHF. The other pair that I wanted to speak about is Euro NZD, because it has some pretty interesting price action at the moment. So here on the daily, what we have on Euro NZD is a clear M formation. Okay, the market has created a very clean M formation, and from here we want to see a retracement. Now we want to see a retracement to where? We want to see a retracement to the neckline. Okay, the previous support turned resistance here. So overall, we want to see this nice push to the upside to go and retest the neckline, previous support turned resistance. And we are also at daily support, which confirms that we definitely can expect a pullback from this area. But we have to go and see what banks are doing on the euro and what they're doing on the NZD. So if we go and see what they're doing on the euro, we can see that there has been some massive shorting lately. We went from minus 47K net positions all the way down to minus 85K net positions, with the last report adding 13.1K shorts. So massive amount of shorts added on the euro. They have started adding some longs, and this is a good thing because it means that we can have a pullback. And if you look at what we have on the NZD, we can actually see that it has been getting a lot stronger. Okay, obviously we went from minus 40K to minus 4K, with shorts closed in more than half, from 52K shorts to 23K shorts, and the longs doubled, basically, almost doubled. So a massive amount of longs added, a massive amount of shorts closed, net positions definitely increasing, but in this short term, we can expect some weakness, because we went from 2K to minus 4K with a lot of shorts added lately. So what we can expect here, if NZD will get weaker, and euro will get stronger in the short term, we can expect some pullback, completion of the information which we already expected from a technical perspective, and then from here we can have a nice short. So how we will be approaching this? If we're looking for a long from here, keep in mind that on the 4 hours, our rules for entry for the long are not satisfied yet. So we can't take the trade, but we could be looking at a riskier position to the upside. Keep in mind that if you're looking for a long, it's against the overall trend. So it is obviously riskier. But what we will be doing, we will be monitoring on the 4 hours. If we see one of our clear entries satisfied on this in this area on the 4 hour time frame, then we will be looking at this long. But definitely after this pullback, and if the pullback will come at all, 100% we will be monitoring price action inside of this area. And as soon as the market will provide to us one of our valid entries on the 4 hour inside of here, we will definitely be looking at this short for a good risk to reward, at least a 1 to 3 to the downside, and very good probabilities for this push to happen with an overall downside target here. Obviously, as usual, we have to be reactive and not predictive. If the market inside of here on the 4 hour will just show bearish price action, we will just let the market go to the downside and reevaluate the situation. If the information will complete and the market will keep showing bullish momentum on the 4 hour time frame, we will just let the market go higher. We can't predict the market. We can react to the market and apply our edge, because we know that in the long term we will definitely be in profit because we are following a strategy that has an edge over the market. So as usual, guys, have a strategy, develop it, test the rules, know what you're doing, and always follow your strategy. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you, as well as going and checking out the mentorship program, because it's a very complete program. You first get all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how you're supposed to be applying the strategies, as well as answering every question that you have each and every day. So go and check out the mentorship program, or go and check out the next video.